Good evening and welcome to the Money Show. I'm Kavita Thaplyal and this is the place where money stops being confusing and starts working for you, because let's face it, every decision we make, from the coffee buy in the morning to the home we dream of owning, from planning our next holiday to secure your child's future, has one thing in common, that's money. Yet despite the role it plays in every chapter of our lives, very few of us were ever taught how to manage it, grow it, or make smarter financial decisions. Now that's where we come in. Whether you are just starting your financial journey, building wealth, investing for the future, planning for retirement, or simply trying to make your salary stretch a little further, this is your show. And this is your show because every week we'll cut through the jargon and noise and bring you practical advice from our experts. And this is the show where we also answer your portfolio queries. So just in case anything about investment, insurance, tax, or any financial goal that you want to achieve, you want an investment strategy, send your questions on the WhatsApp number that we'll flash on the screen, and the email IDs 865-797-4571 is the WhatsApp number. The Money Show at etnow.tv is the number, is the email ID where you can send across your question, and we will help you align all your investment strategies with all your financial goals. So that's the show. And we not only talk about investments, we also focus on insurance. We also have a senior citizen special on every Tuesday where we help seniors achieve all their post-retirement dreams, financial dreams, and help them live a very healthy financial life post-60, post-retirement. So if in case you want help from our experts to do that, send across your questions on the WhatsApp number that you've just seen and the email ID. But it's been another fascinating stretch for the markets, from shifting global cues and earnings to changing investor sentiments. Now, there has been no shortage of developments, keeping markets participant on their toes. Now, in an environment like this, cutting through the noise and focusing on what truly matters has never been more important. And that's exactly what we are here to do today. Joining us is someone who has spent years helping investors make sense of markets beyond the headlines. Aparna Shankar of the wealth company Mutual Fund brings deep expertise, a sharp perspective on market trends, and a practical approach to navigating uncertainty. Aparna, hi, good evening, and it's a pleasure to have you on the show. Okay, so first, a very basic question. Now, from a CIO's lens, I want to understand how is market placed right now, according to you?
So good evening, and thank you for having me on the show. Everybody has this question in mind, and what we see is that the markets are really very dynamic. I won't say volatile because that's then when you say volatile, there are sharp, uptrends and downtrends. That is what we are not seeing here currently. I say dynamic because there has been, some of the sectors are doing well one day, some other sectors are doing well other day. What we feel is that from here onwards, markets is into a good momentum, and earnings have to support the kind of momentum, the longevity of this momentum. And what we see is maybe the last quarter, we were expecting a large, kind of cost pressures on many companies, which we had started reflecting. In this quarter, it was expected that the cost will be very, kind of accelerated or very high. But the companies have been able to do, business with better cost efficiency. Some of the cost pressures have been passed on to the customer. Some of the cost pressures have been, kind of compensated by being more efficient. And as a result, we are not seeing huge pressures on margins, and that's a very positive factor. I would look at it, and if this continues, next few quarters will be really very good earnings growth is what we are expecting, which will maintain or keep the momentum of the market, good.
Just taking a leaf from the answer, because you stress so much on the earnings, definitely decides the momentum, because that is all we have as far as domestic cues are concerned for now. But having said that, so can we sum it up from your lens that earnings so far are as expected, in line with your expectations?
I would say that they are little better than our expectations because we were expecting higher margin pressures on lot many companies, which is not visible. I mean that's a positive surprise for us.
Sectors you want to highlight where you got a positive surprise?
One very, kind of we were little worried about this sector was auto ancillaries,
Okay.
autos, and banking was not so much of a worry because I mean, RBI had taken a lot of initiatives which, will start reflecting in some quarters in the sustainable margins for the banks. But I think the consumption and the consumer facing businesses, we were expecting that there will be a lot of pressure, but which is not visible.
Uh, what about the valuation gap, across market segments, across market caps, large, mid, and small cap? What's the valuation gap that you are noticing?
So valuation gap, I mean, it's a relative term, I would say, because the small cap have had much better earnings growth, and I mean, we understand that whatever is doing great or growing much better will not come cheap, and that's why the small caps and maybe some part of the mid cap are trading at a elevated valuations while some large caps, because these are mature businesses, there are less scope of positive surprises. The valuations are in a range bound territory, is what we feel.
Mhm. All right, but then, for people listening to you and especially retail investors who've had their money, whether through direct equity or through mutual funds, there is a value trap and there is a growth at a reasonable rate. How would you like to explain this to our viewers who are right now maybe thinking about what is good in the market for them?
See, I usually say this that good things don't come cheap. And I mean, this is, kind of a very cliche that everybody is aware that India is one of the fastest growing economy in the whole globe, and which will continue to stay so for many more years to come. And if that is the case, I mean, if you look at even global investors, they are also finally asset allocators. And they also understand that wherever there is a growth, valuations will catch up. And we have in the last, kind of corrections what we had in last few months has in even not in absolute terms, but in relative terms, India has become more attractive. So I think that we are very, kind of closer to the point that money outside, residing outside India will start coming, will get invested again into India. It's closer than farther, is what I can say. I won't say that this is going to happen next month or next, week or something like that. But I think if you look at even global investors are asset allocators, and India has become attractive from valuation perspective. And if the earnings continue, I think it will continue to stay attractive for all the investors, domestic investors and international investors also.
I will come back on the FII bit, but I want to talk to you about IT. You seem to be having a very cautious and a tactical stance on IT due to declining ROE and AI disruptions. Do you still maintain that stance? And if yes, what specific signs or metrics will make you comfortable shifting back to IT and maybe having it in your core portfolio as an allocation?
Correct. Correct. So it is part of our core portfolio in a sense, but it has become a tactical call. So we have some IT stocks in our portfolio also. I would, kind of go a little back and maybe not this last 2 quarters or 3 quarters, but maybe 1 or 2 years. What we have observed is that IT companies were on a downward trend for the ROEs and ROCs. Okay, that is because the mid cap companies were giving, kind of a competition to large cap companies. As such, the business, for multiple reasons, the pie of the business was not expanding as we would love to have that expansion, and that's where the competition was hitting up. And that's where we had seen lot many mid cap companies has had done better than the large cap companies, growth wise and even margin wise. But as a whole sector, the if you could kind of observe it very closely, the margins were trending down. The margins were not at a higher level, which maybe 5 years back were. And it was obvious that the sector will undergo, valuation re-rating, derating, or maybe the valuations will get adjusted in line with the earnings what they are, posting, which did not happen, but it got accelerated because of the AI. I mean, AI and related, factors accelerated that derating of the whole sector. And now there is the pie of a business has shrunk more, and there is a delay in decision making by the customers, and that's why there is a struggle to get a growth in business. But still, I mean, AI is not going to kind of vanish the business. It is just going to be present in different segments or different areas. But this is a transition. But in these transitions, there will be a lot of structural changes which will happen. And we need to get a good sense of those, what could be the outcome after all these structural changes happen. And I think it's better to go slow rather than, going overweight on the sector, and be it tactical. By saying that it is a tactical, we are saying that we are not absent from the sector, but maybe we are a little quicker in booking our profits and move to some other stocks, or a better better valuation wise better companies, is what we are saying. So the IT sector has become a tactical for us. We are still present some bit, and we will continue to wait and watch. And I think since this is a transition, it will take 2-3 quarters for the things to get adjusted, and then the real picture will emerge.
Right. So your views from a lot of standpoint, are concurring with your peers who are also saying that there is an AI reversal story that's unwinding in the market. Well, we all will know when that happens. But, with your emphasis on manufacturing and financials, do you really have these sectors on your radar? And if you have, then how are you managing the valuation risk in mid caps given the macro landscape in the current juncture?
Okay. So, very good question. And if you look at Indian GDP, what is that is driving the Indian GDP, or maybe which are those material components of Indian GDP? I think manufacturing and services. I mean, product and services. If these two segments are the material, factors for Indian GDP, there will be lot many businesses which will emerge in these two, broad sectors. I think that's why, as if you are positive on India, I think obviously you would, automatically you will become positive on these two major segments. And what we are seeing is that when a nation is growing and manufacturing is supporting, and maybe services is supporting a nation's growth, there would be emergence of lot many newer businesses in these segments, and that's where we will see a plethora of businesses which will get listed in the next few years, and will continue to continue their journey from being a small cap to a mid cap and then to a large cap, is what we are anticipating. That's why we are very positive on these two broader segments.
Are you still maintaining a selectively bullish stance on PSU banks based on consistent underwriting discipline and tech-driven operating efficiencies? With many calling the end of the PSU re-rating cycle, do you still believe that select public lenders still offer alpha?
I think because of the FCNR deposit, getting funds at a cheaper, cheaper than what they were borrowing. That and PSU banks would be a major beneficiaries of this initiative. I think there is little, still some scope left. I mean, there is still, some steam left in PSU banks also. And now this kind of this has become wider. I mean, rather it's not restricted just for few top tier PSU banks, But whichever bank is able to, kind of borrow at even mid-cap banks, which are able to borrow, get the FCNR deposit, they will also benefit from this transition. So I think rather than being a narrow, PSU play, it has now become a wider PSU play.
Right. So now, since we've spoken so much about India's consumption story, we're looking at India's multi-decade structural consumption story. Given that domestic growth is solid but tied to global cycles, we cannot deny that. What structural indicators are you tracking now to signal that FIIs are making a sustained return to the Lal Street, especially after the July FI numbers that we saw?
Yeah, actually, that's a kind of a good revelation for us also that we have. I mean, if you look at last few months or last even one and a half year, the domestic money, the domestic investors have supported the market so well. Sometimes we also feel that do we really need the FIIs to come back? But of course, we need them to. We need wider investor base to be present for a more sustainable, more longevity of the Indian stock markets. I think rather than just being hugely dependent on the FIs, what we have seen as that Indian investor or the retail investor have also started realizing the importance of equity in their wealth creation journey. So that has become, kind of good financialization, good penetration of equity and mutual fund products across India's length and breadth. I think that is where the support is coming. That is where the plinth is getting constructed and the foundation is getting laid. And this is going to be a very strong foundation. And I mean, if they should come and they will come, and that will be maybe a cherry on the cake now rather than the whole cake is what we are looking at.
Right. One last question before I let you go, Aparna. How would you say that market's 18-month consolidation phase was actually a healthy valuation correction? And also going forward, what triggers do you see moving the market from consolidation to a strong earnings-led rally?
Yeah, so I think this quarter is another reflection. I mean, the previous quarter was also a good, there was some growth. In fact, the growth has been there in revenues, but what we have started seeing in last few quarters is that even the growth is at the EBITDA level and net profit level, which has continued in this quarter also. It is despite all those difficulties we have, faced internationally, politically, geopolitics and all those troubles. And if you look at, kind of the base, what we are having, number of companies which are getting listed, more of a reflection of the GDP is coming to, being a part of the stock market. I think that's a very good feature. That's a very, very positive feature for long-term performance of the Indian stock markets.
All right. I think that'll be enough. Thank you so much, Aparna, for giving us your time and helping our viewers navigate through all the market volatility and all the craziness happening. Thank you so much for your time today.
Thank you. My pleasure.
And with that, it's time for a short break. But post that, let's focus on your portfolio queries after the break. Watching The Money Show, and it's time to answer your portfolio queries. Uday Dhut, our guest on the show today, has joined us. Uday, hi, good evening, and welcome to the show. Uday, we are also joined by our first viewer. His name is Adita Sharma. Aditya, hi, good evening. How are you?
Yeah, good evening, madam. I'm good. How are you?
I'm doing good. Thank you so much for sending us your question. Uday can hear you. You can ask away your query.
Sure. So basically, I'm looking to invest around 50 lakh from windfall capital gains after selling my property. Okay. And I have a list of mutual funds which I've selected, which are Parag Parikh Flexi Cap, HDFC Flexi Cap, Motilal Large and Mid Cap, Invesco Large and Mid Cap, and HDFC BSE Sensex Index Fund.
Okay, got it.
So my query is like, if this selection is good to go for long term, if I'm looking for more than 7 years, I don't have any specific aim to build up right now. I'm just looking for a good investment which will generate a good return.
Right, right.
So
Since how many
And
years you've invested in these funds? I mean, what's the timeline? You're already like 1 year up?
I have just started.
Just started. Okay.
Yeah.
What's the amount?
So total amount is 50 lakh lump sum I'm having, but I'm planning to invest it in a staggered way. So
Right, yeah, makes sense.
one
Sure.
is like if this fund selection is good, and whether how much time I should stagger my investments considering the uncertain market.
Yeah.
And since till then, like if say I'm investing in 6 months. So for 6 months, I have some list of funds like overnight and debt funds. So whether those are good. So those names also I have it. If I can tell, then I can bring it forward.
Yeah, we have you've given us Kotak Arbitrage, SBI
Right,
Arbitrage, SBI Ultra
right.
Short, SBI ICICI Pru Saving, and SBI Overnight. Okay, let's just see what Uday has to say. Uday, I think Aditya has a lot of clarity on what he wants. What should be the strategy then? The timeline is very crucial, 7 to 10 years.
Yeah, Aditya, thanks so much for your query. I see that you have some clarity in terms of what you really want. As you mentioned, this came from a sale of property, and you want to essentially put uh, pretty much all of it in equity. I'm assuming that sort of suits your overall sort of asset allocation and requirement per se. I'm going by that assumption. In terms of allocation, you've kept some of these flexi cap funds, which are good and which have done well. Just that over a period of time, these flexi cap funds have become pretty large. So maybe for some of these flexi cap fund, you possibly can choose an option of maybe putting in some money in, say, a Helios flexi cap fund. That could be an option to mix and match with the flexi cap funds that you have selected. That is one option. And you could possibly also look at some of these newer small cap funds along with the small cap funds that you looked at. So maybe you can look at Abundant small cap fund and Abacus small cap fund. You have not kept any debt. So what I felt that maybe you would want to do something like an hybrid, like a balance advantage fund and ICICI balance advantage funds. So around 10-15% of your allocation can go there. The rest of the things sort of look well. We have sort of put together all of this. In terms of your questions, you had two other questions. One was where should I park this money in the interim? So what I would suggest is that see whichever is the target equity fund that you are selecting. So let's just say you are selecting HDFC Flexi Cap Fund or a Bandhan Small Cap Fund or an Invesco Large and Mid Cap Fund. You can either choose the arbitrage fund there or the overnight fund there, and then just do an STP from there. So that way, what will happen is that you don't have to again and again worry about the money coming to your account. So let's just say you are deciding that I'll put 5 lakh rupees in Invesco Large and Mid Cap Fund. So either in the overnight fund there or the arbitrage fund there, you can put in that 5 lakh rupees and do like a systematic transfer from there, from the arbitrage fund or the overnight fund to the equity fund. So that way you do not have to continuously worry about money coming into the bank account. So I would say maybe choose a period of 9 to 12 months to sort of stagger your entry in into the market. And yeah, if there are any further queries, let us know, please.
Sure. All right. I think the strategy has been laid down, and Aditya, all the best. 9 to 12 months is a time frame where you can stagger the money. Let's move on. Avinash Singhal, let's take his question. And he's investing almost 1 lakh per month across 5 funds. You have the names. He has flexi cap, small cap, and mid cap, multi asset also. He wants you to review and also is seeking advice on rebalancing. So he's got Parag Parikh flexi cap, Axis small cap, Kotak mid cap, White Oak multi asset, ICICI Gold ETF. Okay. All right. I think Avinash is there on the phone line also. Avinash, hi. Good evening.
Yeah, hi, good evening, ma'am. Thanks
Hi.
for allowing me to be on your show.
Sure. You're calling from where?
I'm calling from Delhi.
From Delhi. All right. So you've given us the portfolio. Thanks for that. This SIP is going on since how long, Avinash? If you could just give us a time frame.
Ma'am, actually, I started off in 2022 beginning with 30,000 of SIP in 3 funds.
Sure.
Parag Parikh and Axis and Kotak. And probably in the past 2 years, I added this White Oak multi-asset. I think they started off an NFO. That is when I joined this fund.
Okay.